Welcome to The Alternative Investor. Renewable energy is one investment theme that could have legs over the next coming decades. Crude oil may be cheap now, but fossil fuels are a finite resource, and so many of the world's energy companies are shifting their focus to renewable energy sources. In 2019, the world financed $282 billion of renewable capacity, with onshore and offshore wind leading the way at $138 billion, followed by solar that came in at $131 billion. The success is attributable to maturing technologies and falling costs. For more information on investing in renewable energy, we're joined by Mark van Wyk, who's the head of unlisted investments at Mergence Investments. Mark, thank you so much for your time.
Thank you very much, Nastasia.
So let's talk about your assessment of the renewable energy space, especially when it comes as an investment scheme, both globally and in South Africa.
Yes. As you alluded to in your introduction, the sector has really come on in leaps and bounds, where we find ourselves in a situation currently where renewable energy sources can be source of generation cheaper than fossil fuel, therefore making the purchase decision for renewable energy so much more attractive for commercial and governmental institutions.
Right. So when you look at it from a South African perspective, are you seeing a lot more appetite from the conversations you're having with other institutions from a funding perspective?
Yes, most definitely. The market has matured significantly since we initially got involved into the subsector in 2008, 2009. Since our initial entry, we had the promulgation of the Integrated Resource Plan of 2019 by the Department of Minerals and Energy. And the bulk rationale behind the plan was to ensure that we have a bigger part of our energy generation capacity coming from renewable energy sources, mainly driven by a need for the energy security, affordability of supply, and then also at the same time reducing our water utilization in terms of how we actually go about generating electricity. And then lastly, the rural economic theme, together by the climate change theme, is also equally important. So all these factors also lends itself very well to an impact investing theme, together with the fundamentals of renewable energy being quite sound and a procurement program that is effective, is most definitely attracting more and more attention from institutional investors.
When you look at the impact investment scheme, I mean, what are some of the exciting aspects that are happening in that space that you guys have picked up on that might be fascinating to some of our viewers?
Yeah, most definitely the importance of the ownership of these projects from a transformation point of view. It's a new sector being developed in New South Africa. So with the transformation theme embedded within it is quite interesting for us. The local community ownership, together with the social economic development plans that each of the underlying renewable energy projects must have within them, is also quite favorable. And then from our perspective was also the rural economic development component that comes with these projects in terms of the spin-off effects that they have in those rural economies, attracted us, specifically to the subsector. So together with the clean energy, the rural economic development, it makes a very attractive impact investment theme to consider.
Who is this designed for? I mean, the typical investor, what are some of the, what would the risk profile be rather for somebody who's looking at doing or looking at renewable investments?
So institutional and retail investors got different mechanisms to enter into this subsector from an investment point of view. Maybe if I should start off with the retail investor, there are some listed companies on the Johannesburg Stock Exchange now that have acquired equity interest in existing operational renewable energy projects. So that is an entry point for those investors. For institutional investors, the entry point has been mainly through private equity or infrastructure equity funds on the equity side. And then similarly, private unlisted debt funds or credit funds in the unlisted side. And then also from a pension fund perspective, those pension funds have been allocating sizable funds to both unlisted equity and unlisted credit funds to get exposure to the subsector.
Right. Last question. What should investors keep in mind if you are considering looking at the renewable energy space?
I think it's important for investors to realize that it's a long-term investment program. There is the fundamentals in terms of your capital preservations, certainty of income generation, with the long-term offtake agreements with National Department of Energy and Eskom for energy supply. It's quite a favorable investment opportunity from both an equity and debt point of view. But it is most certainly a long-term investment as opposed to a short-term investment with significant capital appreciation in a short period of time. So it would quite be attractive investment opportunity for certain type of investors.
All right, Mark, thank you so much for your time. That's Mark van Wyk, who's the head of unlisted investments at Mergence Investments. We now take a look at what's happening in the crypto space, and Bitcoin posted its largest one-day decline in about a month, just a day after reaching $12,000. Other digital currencies registered deeper declines. The world's largest cryptocurrency fell as much as 6.9% before recouping some of the losses. The drop was the most since early August. Bitcoin last touched $12,000 2 weeks ago, and despite this, long-term advocates point to increasing demand from institutional investors. Last week, we saw Fidelity Investments launching their first Bitcoin fund. Well, that's it from me. I'll be back tomorrow with Books on Point. My colleague Numpumelelo Sisiba is at the top of the hour with more news, and I'll be back with Books on Point, as mentioned, and we do have our weather details at the top of the hour.